Hey folks, just a quick update for members. I'm going to just go through some of the tweets that I put up on X and go through these with you. These are the instruments of interest at the moment, and let's start with silver. So you can see I've put a zone in on silver, this red dot here for a target level to potentially purchase silver. It's at the bottom of this falling angled line, and it's at the Fibonacci level. But let's go and have a look at the charts and see how silver looks actually on the chart. And I'll just switch across to that. Yeah, so here's the silver chart. This is the day chart, and there's that circle I had drawn in on that Twitter post. So there's the 618 fib, and this level below here is the 786 fib, and then there's a green support line, the swing low. And we've broken down through this channel. We had a big sell-off, but we're just entering into the sort of main support level. We did break down through my yellow zone. I suppose that was to be expected because it's been holding for such a long time, and it was just too tempting to break. So we've fallen down through that yellow zone, and we're now approaching this swing low and the bottom of this angled red line, as I said, and then we've got the 786 below that. And that's all at around about $20. So right now we're at $21.13, and I think we could get into this red bubble, and that would take us into close to $20, and potentially lower than $20 down to $19.80. And perhaps even 1950, that's the 78.6% fib. So somewhere in that region anyway is the area that I'm looking to purchase silver. I think overall the picture still remains bullish, and I'm looking for a move back up to these highs at around $26, and then eventually for a move up to about $29 towards $30, and that's at these previous highs over here. So that's the sort of target level. We're into this major support. This overall pattern here is a pretty good support zone. The only danger is that this is actually turning in to a bearish flag, as you can see, because I've got those channel lines drawn on there, that this is just one large bearish flag, and that we've now broken down through the bottom of this flag. You can see these previous highs, lower highs all the time going forward into this, and then eventually the breakdown with a fairly dramatic move. So it is possible that this is a bearish flag and that there's a lot more downside for silver. However, I do think that the fundamentals and current marketing positioning indicate that we should see silver moving higher rather than lower, and that this might not turn out to be a bear flag after all. We shall have to wait and see. But anyway, we've got support levels around about the $20 level into this red bubble that I've got drawn on the chart. So whilst we're here, we may as well look at gold, and this is the picture on gold at the moment. I've got a channel line drawn in. I've also put the RSI in, the 14-period RSI. You can see that we're the most oversold we've been for about a year and a half, actually. I think slightly longer than that. So very, very oversold RSI, which is uncommon on gold. It's not usual, and we're at the bottom of this channel. Let's have a look at the chart. So here I've got the same chart. By doing this actually on the charts, I can zoom in rather than just pointing it out to you on the Twitter. So here's the channel bottom. That's where we are at the moment. We have broken down through this 50% Fibonacci level, and we've got the 618 below us at about $1,788. So that's still below us, and we could still reach down there. We've got the swing low that we're just about at the moment, at around about $1,810. I would call it $1,800 roughly. That sort of level there. That's just about where we are at the moment. But we have this very oversold condition. We've had 7 days in a row of bearish movement, which is quite uncommon as well. Normally these markets move in 7s, 9s, 11s, and 13s. So after 7 days, there's likely to be some exhaustion. And if we zoom right in on there, and I'll go to the 4-hour chart, you can see we've potentially got a tweezer bottom forming here. Now, if we can hold above this and form a bullish candle, perhaps go up to about 1840 to 1845, that would negate this downward move somewhat and give us hope for an upside move. We switch this to a 4-hour chart. You can see we've come to a dead stop, really. If I just zoom out like that, look how oversold that 4-hour RSI is, and that's also very unusual. But let's not worry about that too much for now. But what we've done is we've reached this channel bottom, and we've come to a dead stop. We've got a little one up, one down, sideways candles, and almost no movement whatsoever. This is quite unusual after such a big move. One would expect some follow through, but what we're seeing is a full stop candle. In candlestick terms, that would be considered to be a star, and we see that on the daily chart. There's the star. It's also an inside bar, ever so slightly higher low, but we could call that a tweezer bottom if we hold above there and rally. So we're long on gold at the moment, and that's what we're hoping for to happen. I've also got the uranium chart on here, which is pretty interesting. Remember, we were selling right at the top here on uranium and then got out at more or less break even, a very small profit, but the price has moved down quite sharply. And I was talking about the hype and the uranium FOMO traders getting in right at the top here, and everyone getting trapped on the wrong side of the market, the wrong side being long in this case. And I'm now looking for a pullback down into more sensible levels for us to pick up some more liquidity and to get long again on uranium. If we zoom into the chart on uranium, there we are at the moment. You can see in pre-market we're actually trading at around about $25. I'm looking to buy at this green line, which is this pie, somewhere in this region here, these previous highs, and it's also the channel bottom now. So if we could get back down into around about the $24 level, and perhaps even potentially we could get back down into the $22 to $21 region. I don't think that's the most likely scenario, but that would be a good opportunity to buy uranium as well. But for the moment, I think if we can get down to about 24, maybe 24.20, somewhere in that region where that green line is, and the channel bottom, it's also close to the 50-day moving average, and this 100-period moving average on the day chart's moving up quite quickly, and that will probably meet us at around about the same price, just around about $24. Maybe 20 cents less, maybe 20 cents more, but in that $24 region. And that's why I want to be buying URA for its next move up. Targets for URA above this high that we've recently reached at about $28.30, $28.40, and then all the way up to $31, and then probably higher thereafter as the demand for uranium is increasing and more people are looking to stock up new and existing nuclear plants with uranium to produce fuel and energy where renewable sources of energy cannot fill the gap left behind by the ever depleting usage of fossil fuels going on in the market at the moment. Right now I've got S&P on here, and I could put the NASDAQ chart up as well. We've just gone long on S&P and on NASDAQ. Let's have a look at those charts very quickly and I'll show you why. Let's start with the S&P. This is a very crucial and key level. It's where the 200-period moving average is on the day chart. It's also this previous support and resistance zone. We're also very oversold on the stochastic, on the RSI and various other indicators, the MACD. And we've now sold off from the high down to where we are, or the low today, around about 9%, 8.8%. So quite a big movement down, quite a big retracement. It's a healthy market retracement. We've pulled back right into the support zone. We've actually broken this upward trend or channel line, which I think is a good thing. When these channel lines break, often we get people caught on the wrong side of the market. We're able to pick up liquidity, clear out some of the stale and old hands and paper hands, and so on, and we're able to grab better buyers and better liquidity but lower down. I think that's where we are at the moment. It's a 200-day moving average, and it's also a very key support and resistance line. If I switch this to the weekly chart, well, before I do that, you can see on the daily chart why it's an important level as well. Let's just go back a little bit so you can see some of these levels going back a long time into 2021. It's a very key level. But on the weekly chart, you can see the same sort of thing, perhaps a little bit more easily. And there we are on the weekly chart. So we've had 3 weeks, 4 weeks down, actually 5 weeks down almost. 1, 2, 3, 4. This is the 5th week. So we've moved right down, and there's that pink zone, pink support zone. And not only did I show you it's the 200-day moving average, it's also the 100-week moving average and the 50-week moving average. So there's a confluence of all sorts of moving averages in this pink support resistance zone, a supply and demand area, an area of great interest and volume trading on the S&P. So I think if we're going to be buying, and if we think this is going up at some stage, now is a really good place to buy. Same sort of thing on NASDAQ really, and if we look at the NASDAQ, we've just fallen into this green zone and this red horizontal support zone. Yes, we've fallen below the 50, the 20 and the 100-period moving average, and the 200 is still a long way down below us. And there's a lot of bearish market sentiment right across the board, and we've moved into extreme fear on the sentiment gauge. So everyone's kind of looking to the downside, which is good. Now here's the reason why I've drawn this support line in. You can see it's support going back into 2021, similar to the S&P. This red line is a key support level, but then this broader green zone is a broader support level. If I switch that to a weekly chart, it'll give you a slightly better perspective. So there are the weekly lows going back into 21, and then area of demand and supply. And then we've had a previous dip down here just to the red line. We've dipped below there this time, and then last week we formed this doji spinning top type doji candle. It's not a reversal candle, it's a hesitation candle, and we want to see if that's going to hold by a rally this week and a move up perhaps above the last week's highs at around about 14,910. So that's what we want to see on S&P, just holding above there. And we've gone long on this one as well. And I've kind of split these trades half. So I'm half in NASDAQ and half in S&P. They've been behaving pretty similarly recently, but the NASDAQ seems to have had a little bit more go in it as somehow, for some reason, the risk stocks and things like Bitcoin as well have been quite well bid. So we seem to have seen a bit of a rotation out of the S&P and industrial type stocks back into NASDAQ type stocks. So that's interesting. I'm not going to go into individual names, but of course, if we want NASDAQ and S&P to rally, we need Apple to hold up. Apple just falling off a little bit in pre-market today, but that's okay. And the rest holding pretty firm. Tesla, AMD, Nvidia, all holding quite strong. Apple just a little lower, but that might just bounce when the market opens. Yeah, so we need to talk about the dollar yen. This is an interesting one because we saw an intervention by the Bank of Japan yesterday, shoring up their Japanese yen. What you can see is basically here, this rising wedge pattern, which is a bearish pattern, a reversal pattern, is still holding, even though we spiked down below it with that intervention. We're holding above the wedge bottom, or the rising bottom of the wedge. We're also holding above that green line, which is the 148.50 level, which is the area beneath which we need to close in order to get this move to the downside, moving a little faster and with a bit more momentum. We do now know that the line in the sand for the Bank of Japan is 150 yen to the dollar. So at least we've got that drawn in. We've got that penciled in on our chart, and they're going to try and defend that. So they've already spent a lot of money getting this to spike down. They're going to probably want to continue to defend that level. We might see a series of several interventions in a row. If this tries to start poking back up again, we might see one or two more. And I think ultimately what they want to do is to get this to close down beneath these lows, around 148.50, 148, maybe 147, and get the market to close beneath those lows, and get some of the machine selling on board and some of the automatic selling and market sentiment to think, well, okay, we're probably not going up anymore, and this market's going to carry on moving lower. Target for the Japanese, actually, interestingly, is 134 by the end of this fiscal year. So that's a long way down from where we are right now. And a lot of analysts in Japan and in that market, trading in those markets in Tokyo and Singapore, believe that this market's heading down into the low 130s in this fiscal year. So if we have a look at the chart on this, let's just quickly go here and have a look at the live chart. I'm not going to go through all the other ones. They'll follow suit. You can see they all spike down, the euro, the pound, the Aussie, the Swiss, and the CAD all against the yen. But this is the one that leads the way, of course. And there we can see the same picture. This is a 4-hour chart with the same rising wedge drawn in it. And you can see we spiked below there. But you can see it actually it's better on the 4-hour chart because it's pretty detailed. We didn't manage to close beneath that rising wedge trend line. So we're still above there. We're looking for a close beneath there to start with to get this going to the downside more aggressively, I would suppose you could say. And then the target for all of this is somewhere down at around about 134, which is all the way down at this low that we achieved in the beginning of the year. So that's what we have to look forward to on the dollar yen, and with a bit of luck that'll carry on moving. And I think we might see, as I said earlier, a series of interventions. If this tries to poke up again, we'll see a little bit more and a little bit more, just driving this market down and getting some of the machines and algorithms on side, and also getting some of the market sentiment to shift as traders to the long side on this chart run out of inspiration to continue to purchase. And the last one I want to look at is oil WTI. Now, my comment here is that we shorted this at $93. Now I'm looking for a path similar to this, but given the changing geopolitical landscape, US politics, the fact that the emergency war storage tanks in the US have run pretty dry. That was stolen or used by the US government to offset the price of gasoline and so on, and oil prices were ridiculously high. And then potential international demand collapse caused by economic collapse, basically, or recession. Collapse is a terrible word. Let's call it recession around the world, and naturally the demand for oil begins to drop off as that happens. And my last comment here is it is a crapshoot, or a gamble, or a blind bet. But that's my path, and I've got this drawn in on the chart as well. So let's go back to the commodities and have a look at this. This is WTI oil. We'll talk about sugar and wheat shortly as well. So this is WTI. I don't know. This is a real guess, I have to say. But so far, we've got these 3 black or dark soldier candles. That's a very bearish after forming a dark cloud cover candle at the top there. We shorted at 93. We got out at around just below 90. We're now down at 87.5. Whether we can get down into this trend line or not, or whether we'll bounce up from here, I really don't know. But I think ideally, if we can get down to about 84 or 85, we'll be looking to buy WTI. I think we'll have another go at getting up to this level at around 92, to 93, and then perhaps a collapse down from there back down into 78, below 80 at least, down to this previous support sort of level and the 200 moving average. So that's the overall idea on oil. And really, as I said, this is a complete gamble. The reason I think we might get a bounce over here is simply because of that high there and this high over here. So these swing highs will form support if we get down there. And then I think we'll see a bit of a bounce, probably a test of the resolve. And we might get some intervention again by OPEC and the Saudis and so on. I don't know what they're going to say a little bit later on or what they're going to do. But if they do, cut production and the Russians decide to go along with it, we might see this price spike up again. What I do know, however, is if we continue to see very high oil prices, it's going to be very negative for the economy. It's going to be good for the US dollar because that means inflation is probably going to carry on rising, or at least reverse its downward trend and start rising again. And that will put pressure on interest rates and the dollar to the upside, and things like gold and silver and stock markets to the downside. So we really want to see oil coming off. And if we do get a bit of a bounce off this level, hopefully it'll be short-lived and we can move down to below 80. So that's WTI. And sugar, we've just taken half of our profit on sugar while we're on this page. We're short from 26.60. We're now at 25.50. We've taken some profit. Our target is around about $22, somewhere all the way down here at this sort of pivot that we saw in June this year. But there are going to be some stops and starts on the way, so we'll probably have a bit of a bounce here and a bit of a bounce here at around about 24, bounce at around about 23. So all the big round numbers actually. 25 will probably bounce, 24 will probably bounce, 23, and eventually we'll make our way down to 22, I would imagine. So it's going to be a stuttery stop and start path. We could just see a collapse like we saw in June. This one over here, you never know. We'll have to wait and see. If that does happen, we'll be down at 23 pretty quickly, 22, 23, and be able to take some profit. Natural gas, I've got nothing to say on natural gas until we get to 320 or 250 to 270. So far it's holding up pretty well. I've stayed clear of that for the moment. And then wheat. Well, I think the path for wheat is downwards. I think we've got to see the bottom of this channel on wheat. We broke down through a very, very key level. I put some commentary up on this in previous videos and on Twitter. You can go and have a look at that. But my target for wheat is below 500 cents per bushel. And any opportunities for us to sell, like this recent rally back up to the underside of the breakout point, good chance to sell at about 560, 570. Good opportunity to sell wheat for a move down to below 500. Hope you found that useful, and speak to you soon.